The Michigan Department of Insurance and Financial Services require all mortgage professionals to purchase a surety bond before they can have their license issued. And if this is your first time getting licensed, you may not know what a surety bond is, or the idea of a surety bond is something, a new concept to you. That's why in this short video, I'm gonna help you understand what a surety bond is, why the Department of Banking and Finance requires the bond, how to purchase your bond and save hundreds of dollars, plus other helpful resources so you can get this process done quickly. Before we get too far, I'm gonna say, or rather than say the Michigan Department of Insurance and Financial Services, I'm gonna say either Michigan or the department. And I'm gonna make sure that you understand this bonding requirement, and I'm not gonna waste your time doing it. So if you get value from this video, hit that like button for me. You'll be doing the video a huge favor, and you'll be doing me a huge favor. So let's get started with, what are Michigan's licenses that require this bond? Michigan licenses mortgage brokers, mortgage broker lenders, and mortgage broker lender servicers. So a mortgage broker or originator company or an individual originator is a person or company that actually helps the customer find the correct mortgage product that's going to match their financial goals and the property that they're buying. A mortgage lender is the company that actually underwrites or writes the mortgage loan itself. A servicer is the company that's going to manage the day-to-day, week-to-week servicing of the mortgage, be it collecting payments, issuing late payments, and just the accounting of the actual mortgage. Individual mortgage loan originators who are not sponsored by a licensed company are required to purchase a surety bond, and this one's usually called the mortgage broker bond. What is a mortgage surety bond? This surety bond, which goes by a lot of different names as far as like mortgage originator bond, a mortgage broker bond, mortgage banker bond, and a mortgage company bond. They're all kind of the same idea, and it's a legal contract that acts as a guarantee that you're going to, or that your company's going to, follow both federal and Michigan mortgage lending, services, and brokerage laws, follow the specific licensing regulations in Michigan, and service your customers with fair and ethical business practices. In short, this surety bond is your pledge to the state that you're going to follow all licensing regulations, rules, and laws. But it's also a pledge to your customers that you're going to conduct business with them with good business ethics and practices. It's for your customers' protection. And if it's a form of protection, what does a mortgage surety bond protect against? The department has a licensing process that qualifies and approves mortgage companies. Some of the steps in this process are ensuring they have the appropriate experience, the owners have passed a criminal background check, identified the registered agents, the business has been registered legally, and outline the business plan, among other requirements. And yet, despite these licensing requirements, every year there's going to be a small handful of mortgage companies or individuals who commit mortgage fraud, financially harming their customers. Some examples of these fraudulent actions can include things such as approving a borrower for a loan they can't afford to repay, helping a specific borrower get approved for a loan by providing false information, hindering other borrowers from getting approved by falsifying application information, pushing borrowers into loan products that are not appropriate for them to secure higher fees, creating false fees, among other activities. So the surety bond provides your customers with a form of financial protection in the event of any of these actions actually taking place. And if the customer is victim to one of these actions, they can make a claim against the company's surety bond for financial compensation. However, only up to the amount of the bond, and that's why the bond amount is so important. So let's talk about, what is the bond amount? So the surety bond amount is going to differentiate mainly by two things. One, if you're an originator, it's going to be about the total dollar amount of mortgages you're selling, but most of the time it's going to be just based on the type of license that you're getting. Michigan is also a little unique in that they separate their licenses based on first mortgage and second mortgage licenses. So just a really quick recap. A first mortgage is going to be a mortgage loan that is in first position on a property. So in the event that the owner defaults, that's the loan that's going to get paid off first. And a second mortgage is in second position. So it's going to have to wait for all first position loans to get paid off before any money can actually get to that mortgage. So a second mortgage is going to be a lot riskier. All these bond amounts are set by the department. And what you can do is, if you look in the description, I have timestamps for you. So you can essentially skip ahead to the license that matters to you. Individual mortgage broker or originator bond amounts. So remember, if you're an individual mortgage loan originator and you're not sponsored by a licensed company, you must purchase a surety bond. Here are the amounts for that bond. $0 to $12 million in mortgage volume has a $10,000 bond amount. Over $12 million to $24 million in mortgage volume has a $25,000 bond amount. And more than $24 million has a $50,000 bond amount. And if you become sponsored by a licensed company, you can just let this surety bond or this mortgage bond expire, because you will then be covered by the company's surety bond. Mortgage broker companies, both first and second mortgage broker companies. So here's how this breaks down. It really kind of just depends on how you're going to accept your fees for brokering these mortgages. So for example, if you take your fees up front before the mortgage closes, you have a surety bond requirement of $25,000. However, if you take your fees for closing or brokering the mortgage and you wait till after the mortgage closes, there is no surety bond requirement. Both first and second mortgage broker lenders. Both first mortgage and second mortgage broker lenders have a bond amount of $25,000, just kind of flat. No options in this case. Mortgage broker lender servicer companies. Both first position mortgages and second position mortgage licenses have a bond amount of $125,000. Again, that's kind of a flat fee or a flat bond requirement. There's no like optional options or other stipulations. But what I want you to remember is this bond amount, it's the maximum amount of financial protection afforded to your customers. It is not the price, but it does greatly influence the price, which is why we need to talk about how much does a mortgage surety bond cost? The price of a surety bond is determined by a surety. A surety is just an insurance company that chooses to underwrite mortgage surety bonds. The thing is, every surety is going to be a little bit different. They're going to do their own individual and independent assessment of the applicant, typically looking and using factors such as personal credit of the owner or owners, business and lending and financial experience, prior bond claims if you or any owner has been licensed in the past. Based on these factors, the surety is going to quote a rate, and this rate multiplied by your specific bond amount is going to be the price that you pay. And this is why you should work with a specialized surety agency like Surety Bonds Direct, because we're going to be able to help you save potentially hundreds of dollars, maybe even thousands of dollars. The reason is we work with multiple A-rated sureties. Two things. An A-rated surety just means that when we do issue your bond, it's guaranteed to be accepted by your state. The second part of this is because we are going to multiple sureties, we're essentially your personal surety bond shopper. We're going to collect all these different rates, find the lowest possible one, which means the lowest possible price. Let's look at some examples so that you can see how big of a difference the price changes based on these rates. Let's look at price examples for, let's say, the $50,000 individual originator amount. What I want you to pay attention to is how 1 percentage point to 2 percentage points can make a huge difference in the cost of the bond. And this is going to be money that you can save again. The rates I'm going to say are from really good to about average. A 0.5% rate costs $250. A 1% rate costs $500. A 2% rate costs $1,000, and a 3% rate costs $1,500. So as you can see, getting a lower rate, it's a big deal. It can save you a lot of money. And when you think about it, this is money that you can actually put towards application fees, the criminal background check fees, examination fees. There are a lot of other fees that go into getting your license. And while example pricing is great to see, what's even better is getting your exact pricing today. In the link in the description, you can go to our pricing page where you actually can find all of this information we're talking about, but you can also have a bond specialist go get you pricing. The best part is there's zero cost to having us price shop for you, and once you get a price, you're under zero obligation to purchase it. This just means it's free information you can use to help get the licensing process planned out a little bit better. So go do that right now. What happens once you purchase your bond? Once you agree to a price, purchasing your bond is as easy as filling out an online order form. And the minute your payment is processed, our bond issuing team will get together with the right bond form, all the correct signatures and seals. We'll even e-file it for you with the NMLS. This is the National Multi-State Licensing System. The NMLS is a licensing system that Michigan uses and a lot of other states in the country use to license or issue licenses for occupational licensing that has to do with mortgages and other financial services. And once your bond is filed, the bonding process is done for 12 months. Renewing your mortgage surety bond. The Michigan Mortgage Surety Bond has a bond term of 12 months, at which time it needs to be renewed. This is another great reason to work with a specialized surety agency like Surety Bonds Direct. With us, you get assigned your own bond specialist, and they're going to kind of manage this entire process for you. 30 to 40 days before your bond expiration, they'll give you a call. They'll have renewal pricing already ready to go so that you can just pay the renewal premium, your bond stays active, and you don't have to do anything extra. And that's the bonding process. It only takes about 1 to 2 days from start to finish to get your bond. So I hope you see it's not as mysterious as you may have thought when you first started this. If you have any questions, ask in the comments. I always answer everything. I'll make sure you get the answer you need and get on the right track. Go click on the link in the description. Go get your real pricing, your actual pricing today. That way you have it, you can know what you're going to do for the rest of the application process. It only takes about 90 seconds to fill out the quote form and to talk with your bond specialist. I want to know right now, did you get value from this video? Do you understand this bond? Because if you do, hit that like button for me. Again, you'll be doing this video a huge favor, get it kind of boosted in YouTube. You'll be doing me a huge favor, and I would appreciate that. Thank you for watching, and good luck getting your business going.